Welcome back to another weekly market and financial update. Hot off the press, the Fed just lowered interest rates by 50 basis points. I know I'm a little late on getting the video out to everyone, but I intentionally did so because I knew the Fed was going to be having their meeting yesterday and today, and within the last few minutes, they just announced their first rate cut in a very, very long time of 50 basis points or 0.5%. So this news, I think, are catching some folks by surprise, including myself. I know in prior videos we had talked a lot about the Fed with a very strong chance of lowering rates. And no surprise that the Fed lowered rates whatsoever, but definitely a little bit surprising that they lowered rates as aggressive as they did. I think a lot of folks were expecting a 25 basis point rate cut, but the Fed came out and said, we're going to stick with a 50 basis point rate cut for this go around of rate cuts throughout their interest rate easing cycle. So what does this mean, and what is the rationale behind the Fed lowering rates by 50 basis points and not 25? All this means is that the Fed simply is taking a look at the economic data. They're looking at the job markets and the recent data around payroll and what's been coming out. And we've talked about in the last few videos that the job market has been softening. It's been slowing down, cooling off. And this is really where the Fed has been leading us to because, we've been talking about interest rates and being as high as they are. They finally felt comfortable and confident that the CPI numbers are down to a level that they feel acceptable with. They are at a point where they feel the economy is at a point where it's slowing down enough that they feel they can add just enough relief to allow the economy to continue to do what it has been doing. It's proved to be very, very resilient. But I think at the same time, the Fed also wants to make sure that they don't necessarily tip the edge and send the economy back to where we were during the pandemic and post-pandemic. So again, that's my thoughts of why they lowered the rates of 50 basis points. I don't think it's a bad thing per se. I don't think it's them being overly concerned. I think it's just them being cautious and mindful of the fact that they don't want to see us go back to where we were a couple of years ago. And they feel that a 50 basis point cut is just more advantageous to where we are compared to a 25 basis point cut. So the Fed is likely to continue to lower rates again, probably once more throughout the year. I would say maybe twice, but probably once more. And we'll see how much they will continue to lower rates at that point. But I think the 50 basis point cut will be a very, very welcome sign to financial markets. I think it'll be a very welcome sign to a lot of equity investors. I think for those of you that have started to look toward bonds and adding some yield to your portfolios. As yields start to come down with bonds, anyone who's purchased bonds recently or is purchasing bonds in the very near future should expect a nice appreciation in that asset class. So a lot of news around what's going on today. So thank you to everyone who were patient with me and waited an extra day to get this video out. But again, I knew it would be very timely. And again, I always want to be timely with everyone in getting out what's relevant. And of course, today's news were extremely relevant. So glad to be able to share and talk about this with each and every one of you. So we'll keep our eyes peeled for what's going to be happening over the next couple of weeks and how the markets continue to react. Again, the initial reaction is going to be very, very positive, but Fed rate cycles, when the Fed makes changes to interest rates, it's somewhat of a lagging indicator to the economy. So it can take some time before the economy feels the full effects of a lowering rate. I would say at least 6 months. Typically, it could happen a little bit sooner, but I would say at least 6 months. So by springtime, early 2025 next year, we'll have a much clearer picture of the impact of how the rates are going to affect the markets and the economy. So again, it's just something we'll be periodically discussing and talking about. So if anyone has any questions on this, or they want to know a little bit more about the decision and how it might impact their own financial decision making, their own investment portfolios, again, please feel free to reach out anytime. We're here as a resource at Vision Retirement. So thank you so much for tuning in to this week's video, and I'll catch everyone next week.